Welcome back. You're still tuned into ET now. Shifting focus to primary markets then, and Blackstone-backed Bagmane Prime Office REIT fixed a price band of 95 to 100 rupees per unit for its 3,400 crore IPO, which will open for subscription on the 5th of May. The public issue of Bengaluru-based real estate investment trust that owns and develops Grade A+ office assets will conclude on the 7th of May. Snehi spoke with the management on the way forward for the company. Here's an excerpt of that conversation.
Bagmane is a very quality-driven and customer-driven developer. We have partnerships that go back 15, 20 years with some of our major tenants. The assets themselves are well-researched, design, development and construction to very high standards. And so we believe that whilst the REIT market is a fabulous lever to continue to see the Indian real estate grow, I believe and we believe that the Bagmane portfolio will take it to the next level.
Okay, so that sounds good. Ashok, talk to us about how the IPO is structured. It's a mix of an OFS as well as fresh issue. Can you help us understand what the degree of dilution is going to be by the selling unit holder when the OFS issue is, the OFS component is practiced? If you could just take us through how the IPO is structured.
Sure. So in terms of OFS, the selling is being done by Blackstone, who was our investor, who has been an investor with us for more than 1.5 years. And the sponsor as such is not participating in the OFS. And the remaining size is the primary, which gets infused within the REIT. And the objects have already been disclosed for the usage.
Okay, so just trying to understand, Ashay, this is an entire stake sale happening by Blackstone, or are they going to retain some part of the ownership?
They are going to retain some part of the ownership. So this is a partial sell-off by them.
Okay, and Ashay, while we're talking about the financials, the IPO was earlier priced at 4,000 crore rupees and it was deferred earlier based on market timing. Help us understand what has led to the trimming of the IPO from 4,000 to now 3,405. What has the thought process been?
Right. So actually the fundraise has not been reduced. When we went to the market for the demand, what we realized is there was a huge demand from large HNI and family offices. And the only way to lock them up, because a lot of these HNIs don't have vehicles to come into the anchor book, right? So the only way to lock them in is through a pre-IPO, right? So we raised the balance fund through a pre-IPO, and that's how the size has come down from 4,000 to 3,400, though the overall fund raise still remains the same.
Okay, understood. Thanks for that clarity. Hugh, let's come to you. How will the fresh proceeds, that's around 2,390 crore rupees, how is that going to be deployed? What kind of returns should investors expect from the acquisitions that you're eyeing to carry out on the back of this IPO proceeds?
Well, some of the proceeds will be used to complete some projects under construction. And obviously going forward, the REITs, one of the most exciting things about the REIT is we have a pipeline where we can build up to another 47 million square feet of business park, Grade A business park accommodation. So obviously some of the proceeds will be used to finance that and construction debt. With regard to the yield, I think I'll ask Ashay to give you a broader opinion.
Yeah. So typically in a REIT, you would expect the returns to be somewhere in the early teens to mid-teens. And that is how historically the other listed peers also have performed with a longer history, even though they've passed through a bad period of COVID. And the way this works is there is a yield, which is the going in yield, the first year yield that you get. And plus then there is a growth element which is built in. So every year there are escalations which happen in the leases. And then there are mark-to-market that you achieve on the existing lease. So this way, the overall return profile comes to lower to mid-teens.
Okay, understood. Thanks for taking us through that. You coming back to you, your portfolio includes premium grade A plus office assets with roughly 98% occupancy. Other than that, from what I have read about the company, you are also looking to, I mean, the portfolio also comprises 2 under construction hotels. You have 4 solar power projects in your portfolio as well. Talk to us about how diversified the portfolio is. What are you targeting on that front? And this 98% occupancy, how sustainable do you think that is right now, given that we are in a very hybrid work environment as we speak?
Sure, that's some terrific questions there. Let me address the diversity of the portfolio first of all. One of the successes of the Bagmane Group and the success of the REIT will be our focus and concentration on providing corporate solutions in business park environments to office tenants. Our decision to build 2 hotels on one of our business parks was driven by the need to find solutions for our occupiers. There's a shortage of hotels in that part of Bangalore, and so we made a decision that we would build a luxury 5-star to capture the high-end travel and the weekend market, and a good 4-star corporate hotel that would provide corporate solutions for our occupiers. So I don't think it could be considered a diversity. I think it represents less than 5% in the grand scheme of things. With regard to, I think you used the term hybrid working solutions. COVID was a disruptor, not just in our market, but any market. And in fact, what we've seen within our portfolio is a net growth of tenant occupation. To encourage people to come into the workplace, we're seeing more investment by tenants in the workplace, and that also includes taking additional space in order to provide those spaces that give comfort and meet certain medical and health requirements. So we don't see that change as a negative. We see that as a positive to being a partner with our customers in providing solutions. And most importantly, what we do is we work with our customers, we work with industry experts to make sure that we're providing the right product. Understanding what these occupiers want in the future ensures that we're going to maintain them as tenants, and we'll maintain and hopefully improve on that 98% occupancy.
Yeah. And also to add to that, our portfolio is quite unique in the sense we have 89% GCCs in our portfolio, and that also relays on the stickiness of the tenants even through last 5 years. And even through COVID, our committed occupancy has been consistently much higher and always above 94%.
Okay, so that sounds really good. And Ashay, let's talk a little bit about your financials. I've been going through the numbers of the company, and the net profit is consistent above that 800 crores mark. What is the outlook over there once you list? And let's say in the next 2 to 3 years, any visibility or any target for this number?
So the numbers which are required to be disclosed have already been given in the offer document. We have disclosed our net operating income and how they will grow over the next 4 years till FY30, and it shows a healthy CAGR of 12% on net operating income.
Okay. And lastly, going ahead, let's talk about what success looks to you in the next 2 to 3 years. As we wrap up, if you could give us a little bit of an outlook on everything that you aim to achieve from this IPO and the bottom line in terms of what success will look like for the company 2 to 3 years post-listing.
Wow, you've given me a free advert on your news channel. Thank you very much. Obviously, being able to ring the bell in the middle of May is the first success box that we can tick. We're very excited about bringing, one of the best commercial real estate portfolios. We're very excited about bringing that to the retail investors. We're very excited about building our hotels. We're excited about building more office buildings. We're excited about our growth into other markets, Chennai and Delhi. But perhaps most exciting is how we can benefit and leverage the growing real estate economy in this country, and also take advantage of the 47 million square feet of future pipeline that we have.